Greetings to all, and I would like to thank Professor Rachel Barry for giving me this opportunity to share my thoughts on the intersections of financial inclusion and women empowerment in India. Financial inclusion has always been a very important concept from the point of development, especially in a large country like India. Let's just see what financial inclusion means. It means that individuals and businesses have access to useful, affordable financial products and services that meet their demands, people's demands of transactions, payments, savings, credit, and insurance delivered in a responsible and sustainable way. So, financial inclusion basically has certain drivers which will lead us to the kind of inclusive system that we want to achieve. World Bank report identifies two kinds of drivers or enablers. The one important or critical arm is the drivers of access and usage. So it's not just enough to have the numbers of accounts opened, but it's important that we have a frequent usage of transactions and accounts. So the first thing that we have to work upon is transaction account opening, and also along with that, having a good product design which appeals people to use it frequently. So that's a challenge in a country, in a diverse country like India. There should be readily available access points in such geographically vast and distinct areas. It's very difficult to provide a brick and mortar structure of banking basically. So it's important that we have access points or alternative access points which are created. Digitally, there is a landscape that we are developing and people are accepting it more and more these days. Awareness of financial products and financial literacy also comes in very importantly because India, anyways, falls short of literacy also. So, financial literacy is something that doesn't happen so easily, and people are skeptical about using banking services within the formal financial services. So, awareness is something that we need to work upon. Leveraging large volume recurrent payment streams also will help in formal financial system. But the basic idea is that we have the foundations very clearly put in. That is, the critical enablers are the financial and ICT infrastructures. In the last 2 years, of course, we have seen a massive increase in usage of online banking systems thanks to the forced usage due to the COVID pressures that we have been using online banking more and more. So similarly, the infrastructures of financial access points have also simultaneously been built up by banking systems, and they have all the more promoted usage of online or e-systems or digital delivery of financial products. Along with that, of course, if one wants to promote the usage, it's important that we work upon the legal and regulatory framework. So, if you see the kind of crimes that are coming up recently, one has to be very particular and have knowledge about the kind of laws that prevail uh, and are available to consumers, being so that they're protected for fraudulent transactions. So, a good regulatory framework is also an enabler for financial inclusion. And most of it, above all, the public and private sector commitment is something which is quintessential. And this is something which we are working upon since a long time in order to achieve a good and inclusive financial system in the country. Some facts of financial inclusion are that only 1.7 billion adults worldwide, it's almost 31% of the adults who do not have a basic transaction account. So it sounds, very limited, but if you look at the percentage, it's almost 31% of adults who do not have a basic transaction account. Whereas we understand that any developed country, it is universal banking is something which is taken for granted. That's the kind of usage and access that we have to provide in our country as well. So financial inclusion also has been identified as an enabler for 7 out of 17 sustainable development goals by the United Nations. So it is all the more important because financial inclusion has a cascading effect on all the other development goals that we have set up for ourselves. Most importantly, what I want to connect today is from the point of view of women and formal financial system. So financial inclusion may be one of the leading influencers for increased female workforce participation and women empowerment. And that too, not only for the current generation, but if a woman is included in a formal financial system at present, it would be influencing not only the present generation, but also the future generations to come. So this becomes a very important paradigm for us. But what comes first? Does women empowerment come first or financial inclusion, right? It's like a chick and the egg story where either we work on women empowerment so that we have a financially inclusive society for women, or we work on financial inclusion endeavors in order to get the right kind of women empowerment scales that we are looking for. Simultaneously, to my mind, we have to work on both the sides because they are all having simultaneous effects or intersections which are important. It is important to remove obstacles from both the sides so that we achieve the right kind of women empowerment that we are looking for. So the idea is that financial inclusion is an important paradigm for development in India. And this has been envisioned long back, post our independence period, when our father of constitution, Dr. Bhimrao Ambedkar, who was also incidentally the person who visualized the Central Bank of India with a vision of bringing in financial inclusion and thereby attaining social justice. And social justice is incomplete without women being included, in the system and having access to the formal services of the nation. I'd also like to bring in what Melinda Gates would like to probably opine. She's the co-chair of Bill and Melinda Gates Foundation. She says when the government deposits social welfare payments or other subsidies directly into women's digital banks, the impact is amazing. Women gain decision-making power in their homes, and with more financial tools at their disposal, they invest in their family's prosperity and help drive broad economic growth. This is what probably we were trying to emphasize in the previous slide also, that it has impact on the larger sustainable development goal. When you invest in women as somebody who needs to be brought into the nets of formal financial system. Another renowned economist, Professor Beena Agarwal, also advocates that there should be property rights for women to bring in women empowerment. These rights are what will bring economic empowerment for women, and hence it impacts their agency. So it's important that women speak out for their own rights. So if you want an inclusive society, first we have to work upon the economic empowerment, and property rights or access to property becomes one very significant condition for the same. So all these factors are intertwining. If you look at the facts around financial inclusion in India, particularly from the point of view of women, women hold bank accounts in their names are only 77%, though we have improved significantly. From 2014, it was 43%, and in 2011, it was only 26%. So we have come a long way, but it's just not uh, enough that we see 77% of women holding bank accounts. It's important that we understand the usage pattern and the frequency of their usage also when you say that they are included into the financial system. So when we go dig deeper, it is understood that India has one of the, has the second largest unbanked population, and majority of them are women. And most women do not operate on their own from their accounts, and there are also large number of dormant accounts. A Niti Aayog figure quotes it to be around 42%. So a dormant account would mean that women do not operate their own bank accounts. They may be opening, so that 77% should look positive in some manner compared to the earlier figures. But however, until you start using it regularly, it's far insignificant a figure for us. Women population in India are certainly underinsured. I think this would be true for most of the Indian women, whether they are educated or uneducated, whether they are in the rural areas or in the urban areas, because only 30% of them have a life insurance. And if you talk about health insurance, it is even lesser. Another figure, which is that of women in debt, which means women who have taken credit facilities, would stand around to 26%. Now, this seemingly looks a good figure when you take it as an indicator for financial inclusion, but there is also an adverse inclusion hypothesis, which is doing debates in financial inclusion studies, which says that women are taking credit in their names, but they may not be the actual people utilizing the monies which have been taken on under loan schemes from banks. So that is even more worrisome, because women have loan in their names, but the utility or the usage of the loan may not be actually done for the purpose of livelihoods or for their personal purposes of educating their children, but it may be taken up or taken away by the family for various other purposes, and the burden of repayment comes onto the heads of the women of the family. So this has led to even grim situations where we have seen also suicide rates increasing with women who are in great debt. So that's the adverse inclusion scenario that we are seeing. So may not be a very hearty figure as well, but we need not stop working so on this, because women need to have access to loans. Women who own house property or land in India, individually or jointly, are only around 38%. Now, this is a very recent phenomenon. Not many, women are also aware or eager of having any kind of property rights, but that's the kind of gender construction that we have in India. So, if you look at the kind of property rights, it's always skewed towards the male in the house. That's something which does not lead to economic empowerment of women. Women registered on formal employment exchanges are only 36.3%. The live registrations as on 2016. Now, this is an important figure, because if women don't register themselves, they're not aware about the kind of opportunities that are available in the formal, employment sectors. So they get limited to only the informal work opportunities which are there. So the informal sector, you will see women being outnumbering the males, but the kind of security that you get in formal employment opportunities is way high, and that increases their participation in financial systems. So that is an important number for us, and most importantly, women in leadership positions would impact policy making. So it's all the more significant that we have women in leadership positions, particularly in Indian formal institutions. That will drive the kind of policies that we're looking forward in order to bring a more inclusive society in terms of financial inclusion of women. But only 3% of women working in MNCs are in leadership positions. Of course, in political scenario, we see more numbers because of the kind of reservations that we are looking at, but we're far from what is the kind of requirement in a large country like India. So leadership positions remain a question of, a scene of conflict when it comes to women. In a nutshell, if you see, almost 1 out of 4 financially excluded women in the world is an Indian. So that's the kind of picture that we have at present for India, which is not a very desirable figure. So, what are the major causes of financial inclusion? Some of them we've already mentioned, but social exclusion and vulnerabilities of women is something that really keeps women out of the financial system. Vulnerabilities in terms of moving out, vulnerabilities in terms of being exploited in many ways, and the social construction, which doesn't really allow them to come to the mainstream. Lack of education is also one important reason that keeps women in a financially excluded condition because they're not aware about a lot of things. Lack of requisite documents and collaterals, as we were just mentioning, that property rights are limited or skewed, and which is why a lot of formal institutions who ask for collaterals may not encourage women to come forward to take the loans or participate in the financial system. So there is also lack of surplus income. If they're not participating in the workforce regularly, their surplus income generation is also limited, which is why you do not access financial system. To top it all, you have very high transaction costs in order to save for very small amounts, or probably take a loan at a very high transaction cost, which is why women are discouraged to join the financial system. Lack of know-how and awareness about the products also keep women away from the formal financial system, not suitable to customers' requirements. Now, most of us know that we require a constant and a regular cash inflow in order to be a part of a formal financial system, particularly from the point of view of taking loans. Otherwise, your loan applications are rejected. So most of these women who are trying to be a part of the formal financial system do not have a very regular cash flow. Of course, things are changing with the kind of work that microfinance institutions are putting in, but one has to design proper products and services which would capture this or these marginalized sections of the society. Lack of trust in the system is there very strongly because of some cases that they would have the women here from their neighborhoods. They may not really want to come forward and interact with formal financial systems, so they would rather go ahead with informal money lenders whom they have been interacting for long. Remoteness of the service provider and poor quality of services also adds on to this kind of doubt that is created. So these are major causes according to the Reserve Bank of India, and why we see these kinds of phenomenon coming across in India is also due to the gender construction in India. So what are the sources where we see this kind of differential treatments being given to the male and the female, within our households. So the gender inequality flourishes due to differential treatments at home, in textbooks, media, and also the caretakers who provide support, showing them as a weaker gender, and this prevails very long time in their life. So, what is the result of that? This causes an unequal opportunity which impacts lives of both the genders. Statistically, girls are more disadvantaged and hence more vulnerable. Globally, girls have a higher survival rate at birth and are more likely to be developmentally on track and just as likely to participate in preschool. But in India, is it's something which is opposite. India is the only large country where more girls die than boys. And also, girls are all more likely to drop out of school. And this is a phenomenon which we have been observing since a long time. And educationists have been trying hard to bring a girl child back to school, more so during adolescence. They experience this kind of differences in dropout ratio. In India, girls and boys experience adolescence differently. While boys tend to experience greater freedom, girls tend to face extensive limitations on their ability to move freely and to make decisions affecting their work, education, marriage, social relationships. As girls and boys age, the gender barriers continue to expand and they continue into adulthood, where we see only a quarter of women in the formal workplace. So this kind of gender divide is what adds to, when you look into the figures of financial inclusion as well. So the gender construction has to change in order to impact women empowerment and financial inclusion as well. So what are the concepts of empowerment, right? I borrow Mishra and Tripathi's works. There are overlapping zones of the concepts of empowerment. One concept is that of agency, autonomy, well-being, and access to resources. And the major being, of course, empowerment. Because when you say empowerment, there are a lot of intersections that we are working with, and each one of them is important. Let's just understand what these concepts are. Well-being is a very significant concept where Sen and Nussbaum would like to define it as the aspects of people's lives where they value and have a reason to value. Another important concept is that of autonomy, where we say that it's the ability to make choices over areas of lives that matter, both strategic and daily life choices. The agency, according to Al-Khair, is the people's ability to act on behalf of what matters to them. Now, this is what is the central part of empowerment, because if women are able to act on behalf of what matters to them, it makes a whole world of difference. The decisions would be according to what would impact them. So, empowerment is a process by which those who have been denied the ability to make choices acquire such ability. This is by Naila Kabir. And empowerment is a value addition and a continuous process wherein an improvement in condition of an individual from time t to time t plus 1 can be considered as empowerment. So for empowerment measurement purposes, we would take a difference in the kind of processes that the women have gone through. So in short, empowerment is the process that allows one to gain knowledge, skill sets, and attitude needed to cope with the changing world and the circumstances in which one lives. Empowerment constitutes of various factors like access to resources, autonomy, agency. So all these concepts are intertwined and each one has an important impact on the concept of empowerment or on the process of empowerment, and access to resources is one major concept which we are trying to drive through financial inclusion. So the well-being of women is not only an outcome of development but rather an important instrument of development. That's something very significant. And what are the select women empowerment indicators? As I've already mentioned earlier, that property rights are important. If you look into the figure a little deeper, you'll find that NFHS survey 2015-16 puts it at 38.4, wherein rural and urban women have differential rights. Again, rural women have almost 40%, and urban women have around 35% of property rights, and that too either jointly or alone. So we still don't have a clear idea about how many properties are being owned by women alone. But still, the figures have improved, and compared to the previous survey, where you see in 2005-6, where there's no data available with this regard. So this was not probably a factor which was considered important from the economic empowerment point of view. Similarly, we do not have a figure available for mobile telephony usage as well. So these are important aspects which are going to affect the empowerment of women. Women having a bank account or a savings account to themselves was 15.1% only in 2005-6 survey, whereas it has increased now to 53%. So as we said, a savings bank account is definitely something which is going to put them in the formal financial system, but more important is the usage of these kinds of accounts, and 61% in the urban areas is certainly a good trend or a good beginning towards this. Women having a mobile phone to themselves that they use is also important, because now we are talking about digital financial systems. So the more the women are going to use a mobile phone, it is going to bring them closer to formal financial system. Again, there was no data available in 2005-6, but if you look at the figures in 2015-16, it has increased to 45.9, and in urban areas it is almost close to 61.8%, so which is a heartening fact, because most of us have gradually begun using financial services through our telephones. So e-banking and other services are definitely coming up in a big way, and that will help the financial inclusion landscape also. What have most countries who have achieved good progress in financial inclusion done in common? One of the most important examples that we have at hand is, that of Jan Dhan Yojana, because we have more than 1.2 billion residents covered under the scheme. So policies delivered at large scale, such as universal digital ID, the Aadhaar card. Uh, the scale of this kind of policy and scheme itself, that we have successfully delivered, is a substantive of the kind of achievement that we are capable of achieving. Now, that has to come down in initiatives that we are taking towards women empowerment as well. Leverage government payments which are there, right? So if you're going to provide welfare payments to women through these accounts, then they are definitely going to open the bank accounts, and that's our experience in the past. For example, 35% of adults in low income countries receiving a government payment opened their first financial account for this purpose. So that kind of planning and implementation is certainly going to bring the women into the financial system. Also, that we allow mobile financial services to thrive along with security systems, of course. So, for example, in sub-Saharan Africa, mobile money account ownership rose from 12% to 21%. Now, that's the kind of reach that a mobile telephony can give, particularly when your brick and mortar structures are not going to reach the remotest areas due to feasibility issues. So World Bank has been, emulating these kinds of schemes in developing countries with a great impact. Now, what are the financial sector strategies, particularly for India? You're aware about the general purpose credit cards and Kisan credit cards that may bring in many women also into the fold of financial system. Also, no frills accounts have been there since almost couple of decades now, or more than that. But recently, because of Jan Dhan Yojana, it has become even more prominent. So now they are known as basic savings bank deposit accounts, which are very important to start off just being included in a formal financial system. Know your customer is also very important by banks and other financial institutions, because women would be comfortable in banking or entering into a financial transaction only if they build a trust with your agent or whoever is the correspondent. So therefore, you see the banking correspondent model or business correspondence model also coming up in a big way, because you have to continuously interact with clients in order to win their trust. Expanding financial technology and fintech also is very significant, as we were talking in the model earlier, because access to financial technology is not going to come without the awareness of that, and without having very easy to use but high-tech models which are not going to fail in rural areas. So that's the kind of expansion that we are looking for when you want a more financially inclusive society. Electronic benefit transfers taking place through these kinds of accounts that we open up. A very big impact has been seen through the self-help group bank linkage model, particularly that of NABARD in India. And so we would see many, many women making or becoming a part of self-help groups and joining the credit and saving schemes that are being operated by either the government programs, credit cooperatives, NGOs, or other microfinance institutions. Uh, in conclusion, if I have to sum up my thoughts, uh, I'd say that bank accounts are quintessential, but the usage or promoting more and more operations by women of these bank accounts is more important to really consider them as included in the formal financial system. It's important that we do not ignore the insurance of women, particularly the laborers. Insurance needs to be upscaled, and the new labor code definitely is moving in the right direction in offering some social security schemes to the women, particularly in the informal sector, that will bring them into the formal financial system. Training for operating financial bank transactions is also something which we have to look for, because women are always skeptical. Even very well educated women are also afraid of using e-products, particularly on phone or laptop, or even via any other gadgets that is there in the bank. People are afraid of using. So a right kind of training, a balance in understanding the equipments is something that is required for women, particularly in order to have a financially inclusive landscape. Financial literacy and digital literacy both have the need of our. First, we work on our own literacy levels, and then we talk about financial literacy and digital literacy. So, this is something which we have to work on a war scale. Awareness and participation in social security schemes need to be promoted, particularly schemes like Atal Pension Yojana that takes care of the old age of women, the care requirements when they are in an age group where they'll not be able to earn for their own livelihoods. Gender gap in property rights should reduce, and this has to be taken up, though it has been championed by many women movements recently in India. But women have their own agency if they are able to get property rights. So the kind of economic empowerment that we are going to achieve in India is going to lead to women empowerment. But more importantly, the autonomy of finances. So it's just not enough, as we said, to open up accounts, give insurance. It's the decision making that we have to give into the hands of women. So autonomy of the finances of women, even the most educated women, may not be taking their own decisions when it comes to finances. Having a participative decision is something fine, but the autonomy or the final say of the finances of women need to be taken up by them. That's the kind of autonomy that we call as women empowerment in the true sense. But for this, you need legal and cultural as well as behavioral change. Only then we'll probably achieve the kind of development that we are trying to get, and the kind of financial inclusion that we are wanting to drive in India. Thank you so much for your patient hearing, and I thank Kuvempu University for giving me this platform to share my thoughts. Thank you so much.